Hello folks, Armando Barbosa here with Vision Mortgage Company, bringing you the Vision Mortgage Minute. Information you should know about the mortgage industry in a few minutes or so. Today we're going to continue with our discussion of something we are calling our non-traditional or non-QM types of loan programs. And specifically today we're going to focus on something called the Asset Qualifier Program. Now, in lieu of income, borrowers that have really significant net worth can qualify for a mortgage loan by documenting sufficient assets to cover some of the following. Number one, the loan amount. Number two, the down payment, obviously, closing costs and prepaid items, plus 5 years of monthly debt expenditures and 6 months of PITI, principal, interest, taxes, and insurance on reserves. Now, the minimum assets after closing is $500,000. So if you are able to make that work and have a down payment scenario that after you make your down payment, after you pay your closing costs and you meet this reserve requirement, you still have $500,000 in the bank, this program may be for you. It also has a pretty strong or reasonably strong credit requirement. It has a 700 minimum FICO score. However, if you have happened to have a bankruptcy filed, dismissed, or discharged, or a deed in lieu of foreclosure, a short sale in the past 5 years, that would make you ineligible. But if it's more than 5 years, it makes you quite eligible for this product. Debt to income ratios are not calculated under this program. That's significant. That is very significant. 4506T form, that's the IRS form that everybody dreads signing, because actually the lender has the ability to check to see how you've made your tax filings. That is not a requirement on this particular loan program. So, residual income, how's it calculated? Again, total assets divided by 60 months, okay? Less the monthly debt, the new PITI, and that gives you a certain amount that you have left over, residual. You must have a minimum of $1,300 of residual income left over after it's all said and done. It is good for owner-occupied residences only, not for investment property. So what are the qualifying assets? Stocks, bonds, mutual funds, and other investment accounts up to 85% of the value of those accounts. Now, on retirement accounts, how about the non-401k? The non-401k, if you're 59 and a half years old or over, will count 80% of that particular fund. If you are under 59.5%, will only count 70% of that particular fund. What about retirement funds? Retirement funds, 401k, up to 50% of the borrower's vested interest may be used. So, with all that said, let me just say this. We have lots of different types of loan products that will fit your individual needs. Visit us with us. Give us a call at 210-348-0077. Ask for myself, Armando Barbosa, or Joey Barbosa, both here, licensed and ready to serve you. Like us on a YouTube channel, please, and subscribe to our channel. We have tons of videos. We have over 75 videos that are available on a plethora of different topics that you can check out and get some great information, I think, for your future and for your kids' future. Just as a side note, if you have a child that you're wondering, and I'm not talking a little child, I'm talking about a 20-year-old that's getting ready to get into this market, have them give us a call. We'd love to talk to them, make sure their credit is on a flight for 700 FICO score, as we've said. Again, 210-348-0077. Have a wonderful weekend.